So if you have a credit card like this and you carry balance, your credit card company will charge you interest rate. And that interest rate is calculated on an annual basis. So let's say, for example, you have your interest rate, for example, to simplify is 10%, and you owe $10,000 balance. Of course, they're going to charge you. They take the interest rate divided by 12, divided by 365 times the amount you owe, of course. So that will get you out of $10,000. For example, you're going to pay roughly about 83 and 33 cents every month. You will see that 83 and 33 cents added to your balance that you owe overall. So next month or the following month will be $10,000, 10,083 and 83 cents. That's how we're going to roll. And of course, the following month, they're going to add to that, and it keeps compounding. That's how interest rate are charged on credit card. So it's very simple and easy to understand. So now, when it comes to ETF that you invest your money, especially covered call ETF, and the reason I'm talking about these covered call ETFs is because these ETFs usually charge a highest one of the highest, of course, MER than other compared to other just plain vanilla ETFs. And we have, for example, ETFs from Max for a passive income investor, and we also have ETFs from Hamilton. So in this example, for example, Tesla ETF or from Hamilton, from Max charges about 0.99. So if you have a $10,000 invested in this ETF, that means you're going to be charged $99 every month. Every year. So will you see that $99 every year added into your brokerage account, or how are you going to see this? So this is something that it's a question came from someone that asked one of the subscribers, and I thought maybe it's really actually a good topic for me to talk about it and explain how you are charged on your ETFs, especially your passive income investor, because you investing in these products because you want to receive cash flow, right? Passive income. So you have to understand also how you actually pay for you being an investor in these products, right? And I think it's a fair enough to understand and to be more aware of this. So again, if it's your first time, just make sure you subscribe, and if you like my content, just make sure you give me a thumb up. So let's look at an example here. So we have Tesla, we have TSLY, which is Max Tesla Option Income Strategy ETF. So this fund charges about gross expense ratio is 0.99, and then so that means if you have $10,000 invested in this one, you're going to pay $99 every year. So if you divide by 99 by 12, are you going to say, will you see that amount of $99 added to your overall balance, or it's going to be minus? How is it going to charge? You will never see that as an ETF investor. So what happens, that's just not, by the way, this is just not only Tesla. This also applies to, for example, Hamilton Canadian Financial Yield Maximizer, HMAX. We look at the MER, management expense ratio, or actually management fee. This is management fee. There is also added other fees altogether. Let's say, for example, it's 85 altogether. That fee, you will never actually see that money. So $10,000 example, of course, on this particular fund, that means you're going to pay about $85 every month. So you will never see that $85 anywhere in your statement. So if you go on your statement, just plain statement, you'll never see actually you've been charged 85. It's just going to be part of the overall structure of the ETF itself. So how they actually exactly charge, this is how it works. On a fund level of NAV, net asset value, right now, for example, TSLY has 14.95. So this is closed on a Friday. It closed at 14.95. That means the 0.99 has been divided by 365, and then they actually take those little cents, they add into your NAV on a daily basis. So every day that fund is closing, they add the little cents into this NAV, and it resets again next day, trading day, and whenever it closes in the day, it resets again. That's how it works. So this is just, I just want to make this a very short video to just explain how the MER is being charged on this one. It's a very important for you to be aware of how much you're paying on your ETFs that you have, or from your ETF or from your investment. But it's something that you do not have to worry in terms of, will I see statement, will I see charges? And this is just for people who are investing in just like for example the taxable tax sheltered account. You literally have to worry about this, and you'll never have to deal with it. But if you invest in taxable account where you won't actually have to pay tax on your dividend, you'll get a statement will tells you exactly how much you've paid in fees, and then of course you're going to minus those fees. Your accountant of course will do that, minus those fees, added to the amounts that you've gained in dividends, and so you can get the tax right off. So that's all. So for people who are investing in this in tax sheltered account, you'll never have to worry about this. And for people who are investing in taxable account, you will get the statement from the Hamilton or from Yale Max that will describe a tax, how much you've gained and how much you've paid in fees. So that's all I want to explain this. And so again, if it's your first time, just make sure to subscribe, and if you like my content, like it. And if you're a subscriber and you have any question and you are wondering about things on investment, anything like that, just make sure you leave the question. And if it's something that I feel comfortable, and I feel like it's very not simple to explain within just writing an answer, I will make a video and explain further. Thanks for watching. Till we meet again. Bye bye.